Hey everyone, I'm John Hopkins and welcome to your weekly housing market update. Each week, I break down what's moving mortgage rates, what's driving the housing market, and what it all means for you. And this week, we've got a big story. Mortgage rates just saw their sharpest drop since August and are now at their lowest levels since October. But that's not the big story. The market went on a wild ride this week, all thanks to a tariff bombshell from the Trump administration. First, tariffs sent mortgage rates soaring. Then, when the markets panicked, the administration backed off and rates dropped fast. So what does this mean for home buyers and sellers and the market ahead? Well, let's talk about the market reaction to tariff news. Tariffs drove rates up, then down. Last week, the Trump administration announced new tariffs on imports from Canada and Mexico. Markets hated it. Stocks fell, bond yields spiked, and mortgage rates jumped as investors braced for higher inflation. Then, just a few days later, after the market reaction was overwhelmingly negative, the administration pulled back and announced a 1-month tariff exemption. As soon as that happened, rates dropped again. And here's where they landed. Conventional 30-year fixed, 6.63, down from 6.76. FHA, 6.32, down from 6.34. And VA, 6.11, down from 6.16. The biggest single drop since August. So, is this just a short-term dip or the start of a bigger trend? Well, to answer that question, we should start by taking a look at the jobs report, which was a mixed bag. The latest jobs report always tells us where the market might be headed next. So, from a job growth standpoint, the economy added 151,000 jobs, but expectations were for 170,000. Unemployment rate ticked up to 4.1, a small increase, but a sign the labor market is loosening. Wage growth up 0.3 increase in average hourly earnings, down from 0.4 last month. What does this mean? A cooling job market takes some pressure off inflation, which could help the Fed move towards rate cuts sooner. And if inflation data comes in lower than expected this week, we could see rates drop even further. So let's connect the dots a bit. There were 3 major forces at play this week. The tariff rollercoaster. First, rates spiked, then they fell when Trump walked back the policy. The weaker than expected jobs report, which is more signs the economy is slowing down. And the bond market rally. Investors are betting the Fed could start cutting rates later this year. Bottom line, everything is pointing towards lower rates if inflation continues to cool. So what's next? Let's talk about this because we could see a shakeup in rates even more. Tuesday, really big news. We have the inflation report, the CPI release. This is the big one. If inflation is lower than expected, rates could dip further. On Thursday, we have the housing starts report. Are builders ramping up construction? More inventory could ease home prices, and a Fed rate decision coming soon. Everyone's watching out for signs of a rate cut timeline, but we're not quite there yet. So, if you're a buyer, this is the lowest we've seen rates in months. If you're house hunting, now might be the time to lock in. If you're looking to refinance and have a note rate above 7, now's the time. Sellers, you've still got the upper hand, but as home hit the market, pricing strategically is key. The days of just naming your price and getting multiple offers instantly, those are fading. Make sure you get the best agent partner to help you navigate this market. We're at a turning point. Rates are falling, but the next inflation report is make or break. So stay informed, stay strategic, and if you have any questions, let's talk. I'll see you next week. Bye, everybody.